Hello and welcome to episode number 6 of Business Concepts. We will continue talking about sales and marketing accounts receivable topics in this episode, and here are the 5 topics that we will discuss today. So let's talk about one-time customer versus the record templates. So one-time customer is an ability for you to quickly create a sales order for the customer that does not exist in the system yet. And you don't want to spend time setting up the names and the addresses and the terms for that customer, because all you truly want to achieve is to quickly create a sales order for the transaction that probably already happened. So the good example of it would be something that you have an employee store and a company that has an employee store, and they decide to sell to the general public. So of course the preferred approach will be to use the retail functionality and use some sort of point of sale solution integrated with your back office. But if you don't have that functionality available in your system, what you can do instead, you can create a sales order in the system, of course ship it, generate invoice, settle it with a payment that was already received, because everything in that environment is assumed to be prepaid. So in order for you to do that, you need to create a sales order. But as you know, in order for you to create a sales order, you need to have a customer. And you may want to create a generic customer account that says prepaid sales or retail sales or store sales customer. So you will always pick that customer account for any sales order that you create. Or instead, you may generate a quick customer using something that is called a customer template. So what the system will do, it will use a template, which is basically a customer account that you define as a template for one-time customers. And then whenever you create that sales order, you click on the checkbox says, I would like that sales to be to one-time customer. And the system will use that template to quickly generate another default generic customer, which will have just some sort of number assigned to it, and that sales order will be created for that customer. Alternative to that will be to actually go through a process of creating a customer, but to simplify that process by using the templates. So you can create templates for your retail customers, you can create retail templates for your wholesale customers, your important customers, your small, major customers, etc. So you can generate multiple templates, and then you need to go and manually create a new customer. But to speed up that process, you can use one of those templates, and these templates will populate all the key fields that would need to be populated. Of course, you would still need to populate the name of the customer, maybe the address if you're shipping something to that customer, but for example, terms, some reporting fields can be defaulted from that customer, from that template. So that again will just help you to quickly create these customers in the system. So once you created that sales order, another concept that we need to mention here, and that's used oftentimes when you ship to a customer that has on-account relationship with you, is a credit check. So we are talking about a situation where you ship something to a customer and then you invoice them later. In order for you to make a determination should you be actually shipping that, you may want to check their available balance. So let's say the finance department says that that customer has a credit of $200,000. So that means they can buy for up to $200,000 worth of our goods without actually paying, but they cannot buy more. At this point, when they reach that $200,000, they would need to pay either full amount or partial amount in order for them to order more. So the key concept here would be to understand is when exactly do you run that credit check? At which point of that sales order life cycle would you want to do that? So one of the first steps, you can say that, when I confirm my sales order, so once I'm talking to my customer or I got that sales order from my customer, I created it in the system, where it was created through EDI or some sort of electronic transmission in my system, then I will need to confirm it. And by confirming it, the system would also run a check and says, okay, based on the total of that sales order, that customer is good because their overall credit is $200,000. They ordered $100,000 worth of goods that they did not pay for it, and the sales order that we have on hand adds another 20. So we have overall $120K that the customer ordered and did not pay for, but their credit limit is $200K. So in this case, we would let it go. So you can do your credit check at the time of the sales order confirmation. Or you can postpone it and actually run it when you start running your picking. So when it hits warehouse and now your pickers would need to go and physically pick these goods, you can say, should we make sure that we are picking for the customer that has them credit on? So when you generate a picking list, which is another document in the system, you can say, should we actually run the credit check? And of course, running a credit check on the invoice step kind of doesn't really make sense, because it's assumed that the goods already have been shipped, supplied to your customers. So it's really kind of doesn't necessarily make sense to run, in my opinion, credit check when you do the invoice for the sales order. Another thing that we'll need to mention is how do you calculate the amount against which you compare the credit limit of the customer. So you have a credit limit to 100K, coming back to our example, and now we need to understand what is the number that we're comparing that limit to. So one of the ways will be to say, I will only include invoice orders. So that means the orders that have been picked and packed and shipped and invoiced to my customer. That's a number that I'm only concerned with orders that have been invoiced. Right, so that's probably going to be the smallest number of the ones that we will be talking about. So only the orders that have been shipped and invoiced will be included in a number that we will compare against the credit limit. Another option will be to include invoice orders, also the orders that have been shipped but not invoiced yet. Right, so let's say you shipped and invoiced orders that are worth 100,000. But you also shipped 2 orders that add another 20K, but you have not invoiced them yet, because you may invoice them next day, you may invoice them next week, etc. Right? So you have those shipped but not invoiced orders that's worth of 20K. So you may say, you know what, I will compare 120, so I will include the invoice orders of